Hello everyone, welcome and thank you for joining us today. I'm Durgesh Chopra, Director of Investor Relations here at American Water. Now before we begin, let me quickly point you to our cautionary forward-looking statement. In summary, during the course of my presentation, we may make certain comments related to the future performance of American Water. My comments are based upon our best estimates at this point in time, and the actual performance of American Water may be materially different. Now with that out of the way, to really understand American Water, you must first understand the U.S. water and wastewater space. So let me start by giving you a quick overview of our industry. To your left, as you can see, majority of the water systems in the United States serve a population of 3,000 or less. 84% of these systems are owned by public entities like municipalities, and the number actually jumps up to 98% when it comes to the wastewater side. So a highly fragmented industry with consolidation opportunities in the future. On this next slide, slide 4, I want to highlight an issue that is critical to our industry, and that is of our aging infrastructure. The American Society of Civil Engineers has rated U.S. water and wastewater infrastructure as D-. That is actually the lowest rating that they give. With 1 million miles of pipeline, a major water main break happens every 2 minutes. We lose 2 trillion gallons of treated water annually with a direct cost of $3 billion. Similar situation on the wastewater side. With 700,000 miles of sewer main, roughly 9 billion gallons of untreated sewage is discharged every year. Again, EPA estimates that in order to just keep the system up and running, we would need to invest $1 trillion over the next 20 years. Another issue that I'd like to bring to your attention is on the supply side. In 2012, roughly 38 states were in some sort of a drought condition. As we speak today, roughly half the states in the union are in a similar position. So not only do we need to make the necessary investments, but also need to make sure that we have adequate supply of water in the future. Now this is where a company like American Water comes in. With access to capital markets, not only can we make the necessary investments, but also deploy state-of-the-art technology like desalination to tackle our nation's water supply issues. On this next slide, every time you turn on that faucet to enjoy a glass of clean, refreshing drinking water, there is actually a lot happening in the background. Starting from getting that water from the rivers or the reservoirs, to treating that water in a treatment plant, and then finally getting it to your homes or your businesses through our distribution pipes. We do all that background work throughout the United States for less than a penny a gallon. We are the largest publicly traded water and wastewater company, employing a team of 6,600 dedicated and customer-focused employees. We own and maintain 47,000 miles of pipeline, enough to circle the world twice. We treat and deliver 1 billion gallons of water every day. In fact, we touch 5% of the U.S. population, either from our regulated or non-regulated businesses. We operate in multiple areas of the water cycle, starting from treatment and distribution of potable water, to collection and treatment of wastewater, to design, build, and construct of water and wastewater facilities, and finally, in our market-based segment, where we provide value-added services for our customers. In 2013, we recorded $2.9 billion in operating revenues, 89% coming from our regulated side and roughly 11% coming from our market-based side. Our market capitalization is close to $9 billion, and I'm pleased to report that in the last 12 months we delivered a solid 22% total shareholder return. We're amongst the top quartile of utilities when it comes to dividend growth. This year, in fact, we increased our dividends by 11%, so we're up to 31 cents a share compared to 28 cents a share last year. On this next slide 6, we show our very strong stock performance since our IPO back in 2008. Now before we get into the numbers, let's talk a little bit about the history of American Water. American Water was founded in 1886 and has been publicly trading since the early 1940s. In 2001, we were acquired by a German utility which completely exited our business in 2008, and since then we've traded at the New York Stock Exchange with ticker symbol AWK. Now, had you invested $100 in American Water stock back in 2008, your investment today would be worth almost $300. On a total shareholder return basis, we've outperformed major market indexes, including our utility peers. So no matter how you look at it, we've delivered exceptional returns for our shareholders, and we strongly believe in our ability to continue that trend into the future. Now on this next slide 7, let's talk about how do we continue that growth trend into the future. What we show here is our industry-leading long-term 7 or 10% earnings per share growth triangle. As you see, regulated businesses will continue to be a major contributor, contributing roughly 4 to 7%. The market-based businesses and other segments make up roughly 2 to 5%. Now let's discuss these two components individually, starting with our regulated businesses on the next slide. On slide 8, as I stated previously, our regulated businesses make up roughly 90% of our total revenues. We own and operate water and wastewater plants in 16 states. Let's spend a minute now on how our geographical diversity is also a key competitive advantage. It may rain in certain parts of the country, like it did in Northeast last year. Other parts of the country may be hot and dry, like California is this year. So our geographical diversity minimizes weather-related risks and ensures a constant stream of revenues, which you would expect from a utility like ours. In terms of regulatory risks, we may have a less desirable rate case outcome in one state, but that doesn't mean that we'll have a similar situation in the other 15 states that we operate in. Our presence in 16 states also gives us access to pockets of growth. So if a municipality wants to sell their assets, we usually hear about it and we analyze that opportunity on a deal-by-deal basis. Lastly on this slide, New Jersey and Pennsylvania are our two largest states, contributing roughly 50% of our total revenues, and we're pretty evenly spread from that point on. On slide 9, in response to the critical need of aging infrastructure, American Water has invested $4.4 billion in the last 5 years from 2009 to 2013. We're not stopping there. In fact, we've decided to increase our spending by over 30%. So in the next 5 years, from 2014 to 2018, we plan on spending $5.8 billion. This over $1 billion per year investment will primarily be geared towards asset renewals, such as pipe replacements and treatment plant upgrades. On slide 10, we highlight how our commitment to investment has helped us reduce the pipe replacement rate here at American Water. If you look to the chart on your right, back in 2010, our pipe replacement rate was 250 years, with the industry average close to about 200 years. As we've made the investment, we have been able to reduce that pipe replacement rate to 150 years as of the end of last year, and our goal is to get it to 100 years to bring it more in line with the life of the pipe. Now, as we make these investments, it is critical that we balance this increased investments on our customer bills. And the way we do that is by operating efficiently. To your left, we show our O&M efficiency ratio, which is simply our adjusted operating and maintenance expenses divided by revenues. In 2010, our O&M efficiency ratio was slightly over 44%. By operating efficiently and deploying state-of-the-art technology, we've managed to reduce it to slightly under 39% as of the end of last year, and our goal is to bring it to 35% by 2018. On this next slide 11, this is a slide that we're really proud of. Saying and doing are two different things, and this slide actually highlights how our actions have resulted in a positive experience for our customers. Back in 2010, 44% of our incremental revenue requirement was driven by operating expenditure increase. Fast forward that to 2014, this year, we've managed to reduce that to 0%. So as we have reduced costs, we're able to invest more in capital for marginal customer bill increases. If we continue this drive towards efficiency, and I'm here to tell you that we will, we believe our investment of over $1 billion per year will result in, on an average, 2% customer bill increases. Slide 12, let's look at the second major component, market-based businesses. We have 4 lines of businesses here. Homeowner services, which really came out of a customer need offers water line and sewer line protection programs for a monthly fees. Under military services, we offer services similar to a regulated side, but in this case onto military bases. Back in 1999, Congress passed legislation whereby all military bases were asked to consider privatizing their utilities, including water and wastewater. American Water saw this as an opportunity, and we won our first award in 2003. Today, we provide our services to 11 military bases throughout the nation. Our contract services group offers operating and maintenance services to our municipal, industrial, and commercial customers. Lastly, TerraTech is our biosolids company based out of Canada. On slide 13, let me give you a quick update on some recent company news. Earlier this year, our 2013 water quality report came out, and I'm pleased to report that once again we scored above 99% for compliance with US EPA standards. Based on EPA data, we are 20 times better than the industry average when it comes to drinking water quality standards and 150 times better than the industry average when it comes to drinking water reporting and monitoring requirements. We are committed to innovation. Earlier this year, we signed a worldwide licensing agreement with Abengoa for our technology NP Express. This technology was developed by a team of internal scientists and significantly reduces wastewater treatment costs. Lastly on this slide, S&P earlier this year upgraded our outlook from stable to positive. This is something that we are really proud of and highlights our commitment to financial stability of American Water. On slide 14, wrapping up with the company update, last week, American Water was named the Dow Jones Utility Average. This is a tremendous honor as we are now one of the 15 companies included in the index. The index has been representing well-known U.S. companies within the utility sector since 1929, and American Water is the first water and wastewater utility to be included in that index. This is a direct reflection of the dedication and expertise of our employees and a testament really to what we do every day. Slide 15 highlights our top quartile dividend growth rate. Our dividend policy is to have a payout ratio of between 50 to 60% of our earnings and future dividend increases in line with earnings growth. This year, as I said previously, we've increased our quarterly dividends by 11%. We're up to 31 cents a share compared to 28 cents a share last year. Slide 16 is my last slide. And finally, in closing, I want to leave you with why we think American Water is the right investment for you. We've delivered 16% earnings per share growth in the last 5 years and are committed to delivering 7 to 10% long-term earnings per share growth driven primarily by our regulated operations. Our regulated earnings will grow from the $5.8 billion investment, which when coupled with operational excellence will result in, on an average, 2% customer bill increases. Our market-based businesses have strong growth prospects, with risk profile very similar to the regulated side. We're committed to innovation and environmental stewardship and have a transparent dividend practice of paying out 50 to 60% of our earnings as dividends. So in summary, when you think about a value equation of investing $1 billion every year, which when coupled with operational excellence results in, on an average, 2% customer bill increases, and industry-leading long-term 7 to 10% earnings per share growth, and a top quartile dividend growth rate, we think we make up of a solid investment. On this last slide, slide 17, we've listed out our contact information. I encourage you to learn more about American Water by visiting our website www.amwater.com or downloading the AWK app. We are excited about our future here at American Water, and we hope that you are too. Thanks again for your time today, and with that, I can take any questions that you may have. Thank you.
Okay, we're now going to begin our question and answer session with American Water. And on the line we have with us Director of Investor Relations, Durgesh Chopra. Welcome, Durgesh.
Thank you, Paul, and good afternoon, everyone.
Our first question, what is your strategy for acquisitions going forward?
Sure. So just as a point of reference, last year in 2013, we added 30,000 customers. and 20 out of the 30,000 customers that we added were wastewater. And it was a wastewater system that we acquired in Virginia, Dell Services. And the reason why I mentioned wastewater is because that is key to our acquisition strategy going forward. A couple of reasons why. First, the problem of aging infrastructure, and I talked about this during my presentation, that exists both on the water side as well as on the wastewater side. So if you have a water pipe break, you have water leaking out. But as you can imagine, if a sewer main breaks, you have all sorts of environmental issues and you run into all sorts of problems. And as EPA regulations get stricter, we foresee more opportunities on the wastewater side. Then on the regulatory front, we've seen some real positive movement. Act 11 was approved in Pennsylvania. Now, prior to Act 11, when we would acquire a sewer system in Pennsylvania, these systems are typically small and independent, and when we buy these systems, they're in pretty bad shape, so we have to go in and invest a lot of capital, upgrade the infrastructure. So as a result, we would have to, in the past, increase rates, in some cases 100%, 150%. Now, obviously, it goes without saying that that's not sustainable. So we worked with the commissioners, we worked with the regulators in that state, and now what we have in place is Act 11, whereby we're able to combine the wastewater rates with the water rates, so we're able to spread those rate increases, if you will, over a broader base, and thus minimizing the rate shock. And finally, from an internal standpoint, we have 3.2 million customers in the regulated segment. 3.1 of the 3.2 million customers that we have are water only. So if you think about how much value we can bring for our customers, if where we already provide water services, we're able to provide wastewater services, we can use the same bill, same trucks, same crews, same administrative staff, and really pass on those synergies and savings to our customers. So wastewater is going to be a key component and key focus area as it relates to a growth strategy moving forward.
Okay, thank you. And our next question, related to your growth strategy, how fast do you expect the market-based businesses to grow going forward?
Yeah, that's a great question. So I had a slide during my presentation, and that's our industry-leading long-term 7 to 10% earnings per share growth triangle. I guess just first, as a point of clarity, we see our regulated businesses being a major contributor to our growth in the foreseeable future. With that said, we expect market-based businesses to contribute roughly 2 to 5% when you look at earnings growth in the next 5 years. Now, having said that, I think it's worth mentioning here, the market-based businesses or the non-regulated businesses, their risk characteristic and risk profile is very similar to a regulated side. Now, what do I mean by that? For instance, consider military services, which is a line of business within our market-based segment. Military services are typically long-term contracts, 40 to 50 years, and the services that we provide there are very similar to the regulated side. So in the market-based business segment, we expect that segment to grow roughly 2 to 5% with an understanding that the risk characteristics are very similar to the regulated side.
Okay, thank you. And our next question, how has the percentage of investor-owned systems changed in the past 10, 15 years?
Yeah, you would think if you talk to the experts and the gurus and you look at the dynamics, you would think consolidation is happening at a much faster pace, and that hasn't happened yet. We haven't seen a lot of consolidation, which you would expect looking at the dynamics. Now, let me bring it back to the American water equation. So for us, really to hit our 7 to 10% earnings per share growth target long term, we don't need to acquire large systems. We feel very comfortable and confident that by investing in our assets, which is approximately over $1 billion every year, getting a return on that investment, combined with our tuck-in type acquisitions, small systems, we feel very comfortable we can get the 7 to 10% growth target. Now, of course, if there's a large system out there, we'll look at it and we'll analyze that opportunity. But in the past 5 years, on average, we've grown over 10%, and we feel very confident in our ability to grow 7 to 10% in the long run.
Thank you. And our next question, how does a situation like Toledo, Ohio affect American Water?
Yeah, so that's not one of our systems. Of course, we reached out for any help that we can provide. It's unfortunate, but it really highlights why we need to make these investments. And our over $1 billion per year investment that we are making in our infrastructure this year, it really makes the business case and really makes the case to our regulators and our stakeholders as to why we need to make the investment, and it's absolutely critical that we make these investments into our infrastructure in this day and age.
Thank you. And our next question, can you give us a little bit of an overview of your shale business? Is this a regulated or non-regulated segment?
Yeah, so far we are in the regulated arena. What we do is we are on the supply side, so we're not on the treatment side. We're on the supply side. We have laid out pipe, and we provide water to the drillers in southwestern Pennsylvania, and we've seen some decent growth in our sales. So we are looking at the non-regulated segment, and what we've said is that if you understand the concept of return off and return on, we will not risk the return off our investment. We want a guaranteed return off. We can play with the return on, but we want a guaranteed return off our investment. So far only on the regulated side, but when we do look to grow in the non-regulated businesses, we expect a guaranteed return off our investment.
Okay, thank you. Our next question, how are the severe drought conditions that are happening in the West affecting American Water's results?
Yeah, so California has made the headlines quite a number of times this year, and we have operations in California. And in working with the community, our residents, we were able to implement the 20% reduction in accordance with the governor's emergency plan, and we were able to reduce usage and some real positive there. But on that note, thankfully, we have some constructive regulatory mechanisms in California where our revenue is independent of our usage levels. So even when usage goes down, we're able to maintain revenue stability. Now, while we're in California, I do want to mention that we are building a desalination facility, which the goal is to reduce the intake from the Carmel River. 60% design of the desalination facility is now complete, and we hope to complete construction by 2018.
Okay, very good. Thank you. And our next question, why would municipalities want to sell their systems to American Water?
Yeah, this goes back to the problem of aging infrastructure. So what has happened with our industry, and it's unfortunate, is that majority of our infrastructure, the pipes, are underground. And with these municipalities, and really this is an industry issue, a lot of out of sight, out of mind has been happening. So we haven't replaced, or the municipalities haven't replaced their pipes. They're only replaced when they're broken or there's water coming out. So as a result, we are at a critical point now where a lot of investment is required to keep the infrastructure up to date. Now, typically, a municipality doesn't have the bandwidth. So American Society of Civil Engineers estimates that in the next 20 years, we need to invest $1 trillion. And typically, municipalities don't have the bandwidth to make such big investments, and that's where we come in with strong balance sheets, with strong credit ratings, being the largest publicly traded water company. We can make those investments. In fact, we invest over $1 billion every year in our infrastructure. Secondly, because of our size and our scale, we are able to generate a lot of economies of scale, a lot of savings. So when we buy raw material, when we buy pipe, when we buy fire hydrants, we're able to get real competitive rates, and then we're able to pass on those savings to our customers. So it's a win-win situation for the municipalities and also the customers that we serve there.
Very good, thank you. And our next question: what are the growth prospects for American Water on the military side?
Yeah, so we're pretty bullish on the military side, and we won 2 awards this year. There was a period between 2011 to 2013, about 3 years, when not a lot was happening, or none significant contracts were awarded, which American Water would be interested in. And that seems to have shaken loose. Like I said, we won 2 awards this year. Air Force seems to be much more engaged. So in the next 4 to 5 years, we expect about 40 to 50 contracts out for bid. Now, American Water is not going to bid on every single contract. Our sweet spot is really, we would like to see 250 million and over in revenues over the life of the contract. So those are the contracts where we think we can add value, and those are the contracts that we are going to go after. But we remain bullish and we're excited. We like this kind of growth because what I mentioned earlier with the risk characteristics, these are long-term 40 to 50-year contracts with risk profile, which is very similar to our regulated side, which is 90% of our business. So we're excited and we remain bullish on our growth in the military front.
Okay, thank you very much. And I have a few more minutes remaining. What should be the main takeaway investors should have about the American Water story?
Yeah, so first off, water is the only utility that you ingest, and not only it is important for the economy, it is essential for human survival, really. American Water is the largest player in the industry, and our past results are a testament to the dedication and expertise of our 6,600 employees. Looking into the future, we've said our target earnings growth is 7 to 10% in the long term. When you take that 7 to 10%, tack onto that roughly our 3% dividend yield, combined you're looking at lower double-digit returns, which when you look at our risk profile and our beta of 0.7, 0.8, we think we're a great fit for investors looking for steady growth. So I would like to take this opportunity to invite all listeners and all investors to learn more about American Water and be a part of that growth.
Very good. Thank you. We were just speaking with Durgesh Chopra, who is Director of Investor Relations for American Water. The ticker symbol is AWK on the NYSE.